Well, thank you very much for having us today. It's a real pleasure to be here. I'd like to thank the Institute of Internal Audit, TİDE, for having us as speakers today. And as you know, Mr. Salim mentioned, we are talking today about implementing a risk-based internal audit methodology. I have more than 25 experience working in the field of risk advisory services, risk management, internal audit, and compliance. And I'm a CPA, MBA. I'm also a CCSA professional. And my colleague Zaid is a CIA and also a certified fraud examiner and a certified management accountant as well. We bring many years of experience working in the field of risk-based internal audit. And today we're going to share with you the experience that we have in a practical approach on how to implement risk-based internal audit methodology. So starting with who we are as AIBC and Med Group, we have created an alliance. We're both member firms of Allineal Global, which happens to be the fastest growing network of accounting and advisory firms in the world. It's currently having a total of 4.2 billion in revenue and is represented in 98 countries in total. You can see in the middle of the slide here the various services that we provide, and it includes internal audit, compliance, risk management, as well as fraud and data analytics solutions as well. Now, when it comes to risk-based internal audit, it's important that we start with the definitions, the relevant definitions. Now here you can see that we have 6 sections. I'll be covering section 1 and 2 and 5 and 6, and my colleague Zaid will be covering sections 3 and 4. So as I said, there are certain definitions that are important to build the risk-based internal audit on, and we need to cover those definitions before we go into how we implement a risk-based internal audit methodology. So first of all, the first definition is the word risk. I know all of you know it, but the problem with the word risk is that it comes with different scopes of definition. So people in their minds have different scopes. It's very important that we stress when we implement a risk-based internal audit methodology that we are adopting the wider scope definition. And when we say the wider scope definition, we don't keep any kind of category in mind. We cover all types of risk categories, whether operational, financial, goodwill, any kind of risk. So risk under the wider scope definition is defined as anything that will prevent you from achieving your business objectives. Now, the second term to define is also control. Again, you are experts in control. But the problem with control, it has many definitions: administrative, financial controls, and so on. We also adopt the wider scope definition for the sake of a risk-based internal audit methodology. Under that wider scope definition, control is anything that management and staff do to ensure their business objectives are achieved. So it's like the toolbox that has all controls, all tools in it to help them achieve their objectives. Now, let's see the relationship between risks and controls. If we are moving towards achieving our business objectives, risks will try to diverge us away from the business objectives, while the controls will put us back on track. If you have too many risks that are not mitigated by controls, you will diverge away from your objectives. Alternatively, if you have too many controls that are not adding value, you will also diverge away from your objectives because you are implementing an inefficient process. Your processes are inefficient. They have so many controls in them that are not needed, which will cause you to diverge away from your objectives. It's important when you implement a risk-based internal audit methodology to establish the balance between the risks and the controls. We don't have risks that are not properly controlled, and in addition, we don't have too many controls that are not mitigating risks. Under the previous traditional internal audit approach, the auditors used to add controls as they go along, but they never thought of getting rid of redundant, non-value adding controls. This is an important advantage of a risk-based internal audit methodology. The final definition that we need to touch base on is risk management. And you all know that risk management is all about risk identification, measurement, prioritization, mitigation, and monitoring. When we say mitigation, we mean the 4 T's, because they start with the letter T: terminate, treat, tolerate, and transfer. It's important to note that risk management does not happen at the level of the risk management department. Risk management department does not manage risks. They monitor the management of risk happening at the organization. The people managing the risks are the business unit managers. They are the ones to manage their own risks at their departments and implement controls and make sure those controls are working as intended. So when we say the 4 T's, we're talking about the various alternatives a manager has when he manages his risks. He can either terminate the risk by saying this product or service I'm not going to provide anymore. It's usually a senior management decision. Treat the risk by implementing controls to reduce the impact or the probability of the risk occurrence. Tolerate the risk by simply doing nothing, accepting the risk, and then transferring the risk when you transfer the risk to either a subcontractor or by insuring the risk. If you subcontract the risk or terminate the risk, as a manager, he's not in charge of those risks anymore. So what he ends up with are risks that are either accepted or controlled or insured. First element when it comes to risk-based internal audit, we would like to see how big that blue wedge is, okay? Because if this blue wedge is very big, maybe from here to there, it means that this business unit will not achieve its objectives, because by definition, risks are there to prevent you from achieving your objectives. So there will be too many risks that are not controlled properly by that department, and as a result, this department will not achieve its objectives. So if this gap was very big, we will put recommendations down to bring it to an acceptable level. At that acceptable level, any risk that falls under the blue wedge will be a risk that does not materially impact on the department's objectives. Now, let's talk about the risk-based internal audit process. How does it go? Risk-based internal, let's talk, first of all, let's define risk-based internal audit as per the Institute of Internal Auditors. It's a methodology that links internal audit to the organization's overall risk management framework. And it allows internal audit to provide assurance to the board and that the risk management processes are managing risks effectively in relation to risk appetite. Simply speaking, the board has set a certain appetite. Internal audit makes sure that whatever risks that can breach appetite, action is taken to reduce them below the appetite. So as a process, the process is divided into 3 main phases: risk assessment, then testing, then reporting. This is when we do an execution for a business unit, risk-based internal audit process for when we cover a business unit. So we do the risk assessment, and then testing of controls and substantive testing, and then finally reporting. When it comes to risk assessment, internal auditors can either rely on the risk database that the organization has, and that would be in the situation where you have a mature organization when it comes to risk management function and the risk registers. In other cases, the auditor needs to do the risk assessment himself, so he does either mapping of processes to capture the risks and the controls, or he does the CRSA workshops. Our recommendation is the CRSA workshops, and we're going to explain why in a second. Once he assesses the risks and the controls, he captures weaknesses there. And these weaknesses are usually the result of controls not being designed properly or controls not effective by design in mitigating risks. Then the second step would be for the auditor to start testing. And he tests the controls to verify whether they are working as intended. After testing the controls, if some of the controls fail, and prove to be not working as intended, additional weaknesses are captured because those controls have failed. Finally, the auditor, when he finds the weaknesses, whether they are by design or by failure of controls, he needs to test those risks to see if they have happened and to quantify the results of those risks occurring. And then finally, he does the reporting. So this is the compliance test or test of controls, then substantive tests, and then reporting. Now, we recommended the CRSA, but let me define what CRSA is. It's a process in control and risk self-assessment. And by the way, under the Institute of Internal Audit, there is a certification, which I already have. It's called the CCSA, Certified Control Self-Assessment Practitioner. CRSA is a process in which the business unit identifies its own risks, identifies the controls mitigating those risks. If there are risks not properly mitigated, these are weaknesses, they are captured, and then action plans or recommendations are added or recommended to overcome those weaknesses. There are many advantages to following to implementing the CRSA in comparison with the mapping of processes by looking at the process flow. First of all, it transfers the ownership to the business unit. And that's very important because it's important to always make sure that the manager understands his risks and his controls. It also creates awareness, as you can see here. It promotes controls and accountability throughout the organization as a whole. It increases the comfort of the board and external stakeholders that controls are effective because you will have a map of all the risks and controls in all business units and where the weaknesses are. It improves efficiency of operation by abandoning unnecessary controls. And finally, it aids management and audit to identify potential exposures and weaknesses in the control environment and accordingly prevent fraud from happening. So the CRSA workshop comes out with an output, and this is what we call the risk and control matrix. I will show you an example of the CRSA workshop for a procurement function. Now, this example is taken from a system that we use. It's called CARE-Web. CARE stands for Control and Risk Evaluation, CARE Web. This is the system that we use to do a risk-based internal audit methodology. Now, first of all, you capture the risk register, and when you capture the risk register, for example, for a procurement function, you have so many risks that you can capture. Usually there are 30, 40, 50 risks in a particular business unit function. For example, delays in processing purchase requisitions or issuing a wrong purchase order. If you look at the details of the risk, you need to capture the short description, the long description, the objective this risk impacts on, and the impact, the probability, and the asset type this risk impacts on. The risk can impact on cash, as the example here, or it can impact on goodwill, the reputation of the organization. It can impact on regulations, and so on. Now, once you've captured the risks, the second step in the CRSA workshop is to capture the controls. Again, this is a screenshot from the system that we use, CARE. These are some of the controls that are there to mitigate the risks. You can see here control 50, which are 3 quotations from suppliers. You capture the control long description, and then the control type. Preventative, preventing an error from happening. Corrective, allowing you to detect the error and fixing it before you lose any value. Detective, detecting the error, but after the fact, after the loss might have occurred. Deterrent is simply to scare people away. And other entity, this is a control that is executed by another entity. Once the risks and controls are captured, they are linked together in what we call a risk and a control matrix. This is what we call a risk profile as well. Another name for it is a risk profile. So the risks are in the x-axis here, and the controls are in the y-axis, okay? When you score the risks, the controls against the risks, the system will automatically tell you whether you have enough controls to mitigate the risk or not. So it will tell you that A is excellent control, B is reasonable control, C is weak, and D is very weak. So where there are C's and D's, you need to develop recommendations or remedial actions, again in the CRSA environment, where the business unit is with you, you agree with them on those remedial actions to mitigate those residual risks or those weaknesses. The thing about the system is that you can enter those on the system, and the system will show you what we call the predicted environment in here, which is the situation after you implement the recommendation. So this was a C. After you implement the recommendation, it will become an A. And this was a D. If you implement the recommendation, it will become a B. The system also measures the gap between the target and the actual, which is the blue wedge we mentioned to you a bit earlier. Now, once we capture the weaknesses or the C's and the D's, now we develop what we agree on the businesses on the additional controls needed or the controls enhancements needed to ensure that those weaknesses are mitigated. So for example, one of the weaknesses captured is that there could be a possibility or a scenario in which we purchase functions that are already in stock. For this particular company we're talking about, their system, their inventory system, does not show all stock in all warehouses. It only shows the stock in the main warehouse, okay? So what we are recommending is that the new system or the system to be adjusted or fixed so that it shows the level of stock in all warehouses. Accordingly, when the purchases officer receives a request, he checks all warehouses for that stock and decide whether to go and purchase items or not. Now, I'm going to stop here and leave it for my colleague Zaid to cover.
Thank you for that introduction, Mr. Nasser, and thank you everybody for joining this session. Now, having had a proper understanding of the various definitions used for risk management and for risk-based internal audit, now comes the time to actually go through the process of implementing a risk-based internal audit approach. Now, similar to any other kind of audits, the risk-based internal audit is made up of three elements: the planning, execution, and reporting. But since it is a risk-based approach, let us see how these elements would be treated in a unique manner. So when we are planning for the internal audit cycle, there are two main components that we need to take care of. The first component is the available number of mandates and the availability of the team members to conduct those mandates. So this would require you to calculate how many mandates do I have using your existing team members. That's why we prefer to use a tool such as CareWeb that would allow us to manage the internal audit team and identify the number of working days available for each one of these team members, and therefore identify the total number of man days available by our team. The next step would be to start building the portfolio for the internal audit cycle. To build the portfolio, we would rely on various elements that would provide us with an objective assessment for the prioritization of the business units in our audit cycle. So assuming that we were requested to conduct an audit for a number of units in the during this audit cycle, we need to have a way to prioritize these units. So our system would allow us to prioritize these units based on various parameters. This would include the complexity relating to how complicated the business unit's operations are, throughput, which is the average number of transactions, value, average value of transactions, stability for the business unit in the sense that is it a new business unit or has it been an existing one for many years? Management in the sense that if the management team is new or not, status of the control environment, and time since last audit. Now, these are the parameters that in our system when using CareWeb we rely on in order to build or to identify the priorities for each one of the business units. So the next step would be to actually fill up the rates for all of the departments that would be covered during the audit cycle. Now, our system would allow us to prioritize these departments after inputting these parameters, which is something that you need to do in order to plan for a risk-based approach. But what you do have right now is an objective assessment of the prioritization of the business units based on these parameters. After the planning of these departments and agreeing on the prioritization of them and obtaining the audit committee's approval on this plan, it is time to schedule for these audits by agreeing on the expected start and end date and the lead auditor responsible for each one of these audits. Now, after the planning stage is complete, it is time to start executing the actual field work. Now, as Mr. Nasser has indicated, that the entire process starts with conducting a risk assessment workshop, a CRSA workshop. The point of this workshop is to populate the risks and controls available in the departments, because these risks and controls are what's going to be tested using the execution during the execution method. So there are two main kinds of tests that would be conducted during the field work. The first kind is compliance testing, which is simply to state that we are going to test whether the controls themselves are working as intended. And the other kind, substantive testing, is to verify whether the risks that we are testing, the weakly controlled risks, have actually occurred or not. So substantive testing would require us to do a more detailed level of testing in order to verify whether the risk has occurred and the value of the potential loss. Now, due to the size of the business units that you may be working with and the number of risks and controls in each one of these business units, you may need a system to actually collate all of that information together. So using our, for example, using our system CareWeb, we would be able to conduct compliance testing for the controls. The screen is showing controls for purchase requisition system control. So you would be able to see what the control is. You would build the test program for that control, and then you would be inputting your results in the system. Now, obviously, when we are testing controls, it's not a black or white area. So there are various levels of efficiency. So we would be able to identify whether the control is always working, mostly working, sometimes, or never. And we should also be able to highlight what are the risks that have been impacted as a result of this control's inefficiency. Similar to that, we would be able to enter the results of the substantive testing. So we would be able to view what is the risk that we are testing, what is the audit program of that test or the test steps, and what is the test results. You would also be interested in identifying whether an actual event has happened and taken place in order to consider in our future assessments of the control environment. Now, at this stage, you would be needing of a system or a tool that would allow you to transfer all of this information and communicate it directly with management for them to add their own management replies on each one of these findings. And then for you to be able to move on to the next step, the reporting stage. So when we are reporting any internal audit findings, it is important to highlight the 5 C's in each one of these findings. So these 5 C's are, as we know, condition, criteria, cause, consequence, and corrective action. But since we are relying on a risk-based approach, we need to link these 5 C's to the risk-based methodology. So after identifying the condition that or the issue of the problem identified, we would be able to link it with the very specific control that has been breached. And since we have identified the control, we would be able to, or we should be able to identify whether the problem or the cause was as a result of a failure in the control deployment or a deficiency in the control design itself. And since it is a risk-based approach and each one of our controls is linked or assists in mitigating a number of risks, we would be able to immediately identify what would be the consequences of this control failure by identifying what are the relevant risks that were impacted as a result of the finding. And then in the final step with the corrective action, since we have this awareness and understanding of the concept of risks and controls, we would be able to come up with objective recommendations that would be linked to whether we need to implement a new control or do we need to enhance our existing controls that we already have. So, With the system, you would be able to issue an internal audit report with the click of a button. As we said, that all of the information that we require to issue the report are already in the system. That being the control that we are testing, the results of the test, the related and relevant risks impacted, details of the finding. And through the system, you should be able to send the finding itself to the management for him to reply on the finding, and that reply would automatically appear on your own internal audit reports. Now, of course, the reports would be subject to your own format and your own organizational requirements. Now, as Mr. Nasser has said, that the components of risks are either risks that are adequately controlled, risks that are insured, or risks that fall within the acceptable gap. But after conducting the CRSA workshop, we may find ourselves that we are not in the acceptable range. So after the CRSA, we would be within what is called a working gap, a working environment, which represents where you are right now, assuming that all of the controls are working as intended. But then, when we do conduct the risk-based internal audit, we may find out that some of the controls that we thought were actually working as intended turned out not to work so well. And therefore, the control gap would increase a little bit more into the actual gap. So the head of each business unit would be required to reduce the actual gap to the working gap by simply bringing back the controls to their working status, and then bringing back the working gap to the acceptable gap by implementing whatever recommendation had been agreed on during the CRSA workshop. Now, since we are talking about the risk-based approach, it is time to do a quick comparison between risk-based internal audit and traditional-based internal audit. So there are four main subjects or areas that the comparison can be done on. So when we are talking about the scope and focus of the audit, in a traditional-based audit, their main focus is on the audit cycle and on the developed policies and procedures. However, as you may know, policies and procedures may not be always up to date, and the business units may not always follow them. That's why in the risk-based approach, we rely on the identification of the actual controls that are being performed by the business unit. So you would have a better focus and a better result of your own internal audit exercise. Another area is the efficiency and effectiveness. So in a traditional-based audit, it doesn't really give any weight to the available resources. It has a target that we need to finish these audits regardless of the need to do these audits, regardless of the requirement. Although in the risk-based approach, it is all built based on the result of the risk assessment. So you would be able to focus your resources on the risky areas rather than focusing on an area that you don't really need to cover for at least another 2 years. Another area is the relationship with the business. It does frequently happen that there is a disagreement between the auditor and the business unit. These disagreements may relate to the importance that was allocated to the finding. There is basically no base for these opinions in a traditional base. However, when we are following a risk-based approach, these disagreements are minimized because simply we have already agreed with the business unit during the CRSA workshop as to the importance of the relevant risks. So the business unit manager would not be able to come back to you right now and tell you that this finding is not important because you know for a fact that it is impacting a high impact, high probability risk. And finally, in the term of objectivity, in a traditional-based audit, the audit rating, the internal audit rating for a report may be subjective. There is no proper grounds for it. There is no basis on which the rating was provided. But when we are following a risk-based approach, it's a more objective method because as we saw in the risk and control matrix, the gap would be automatically calculated on a clear basis. So we would be able to immediately know how did the gap become this much. So it is an objective rating that would allow you to have a more clear vision and information about the department that would allow you and the audit committee to make more informative decisions. Mr. Nasser, this goes back to you.
Thank you, Zaid. So the question that comes to mind is, why do we need technology for risk-based internal audit? And the answer to that lies, Zaid, can you flip the second slide? Okay. So there are three reasons why we need technology for internal audit. First reason is the need, I'll start from the bottom of the list upwards, the need for more enhanced value added from internal audit. Management stakeholders keep asking for additional value from internal audit. Okay, internal auditors are being asked about what kind of contribution they provide to the organization, and the bar is getting up and up and up. So people are, senior management and the board are requesting more from internal audit. The second reason is limitation of resources. I mean, internal audit, if I ask all of you today, what is the main challenge that you have in your departments, you will tell me limitation of resources. And that is very true because of the size of the transactions that your organizations are conducted on a daily basis. So you need to be careful as to how you direct your audit and how you maximize the efficiency of your audit. And finally, technology advancements. Large databases, large number of transactions, multiple sources of data from different formats, different file types, and advanced technological operations leading to more risks facing the auditor. That's why you always need to think about ways to improve the efficiency of the audit, plus ways to improve the way you conduct your audits and to continuously monitor transactions. So if we move to the So this is just an example of the various reports that the system generates and how valuable this is for the auditor. Instead of him preparing these reports, they are automatically generated from the system. A dashboard of the various risks and how they impact and how the distribution is and the map of the risk is on the left side. On the right side, weaknesses identified and which of these weaknesses can breach the appetite. You can see the yellow line here is the appetite level, and the system will calculate for you which risks can actually breach your appetite. There is another tool that we always recommend for you to use, which is data analytics. And that's very important for you to analyze the data and come up with the areas you need to focus on. Under the data analytics, and we use a software called IDEA, which is very easy to use and very valuable. It's developed for the auditors, not just any kind of data analytics software. There are tests for the auditors to conduct. You can see that it visualizes the data for you, it captures weaknesses, and you can use it to conduct many types of tests on all the population, not just on a sample. In summary, when you implement a risk-based approach, and I mean a risk-based approach that is in line with the 3 lines model recommended by the Institute of Internal Audit, you will have the first line of defense, or the first line. They changed the name. They used to call it line of defense. Now they just call it the first line, in which the business unit implements self-assessment tests to verify that risks and controls are managed properly. The second line is risk management, doing what it does, usually to monitor risks. And the third line is internal audit. The reason for this model is to reduce the number and value of incidents. By implementing this approach, you will reduce the number and value of incidents, and you can see that you're moving from this bucket here to that bucket there. Thank you very much, and I'll open up the field now for questions. I think there are a couple of questions now. Question to Mr. Zaid: how agile is CARE software in confronting and mitigating cybersecurity risks to the organizations?
Well, the treatment of cybersecurity risk would be similar to basically any kind of risk. The key part is that you need to identify the fact that these risks are available. So you need to identify the risk, assign them to the proper responsible party, which can be done in CARE, verify whether the required mitigating controls are available and the responsibility of these controls are clear. And in case there are any kind of recommendations, as we said, new controls or enhancements in the existing controls, CARE would allow you to capture these recommendations, assign them to the responsible party, and assign a follow-up date and an expected action date, where CARE would automatically start following up with those parties to verify implementation. So whether it is a cybersecurity risk or whether it is any kind of risk, that's going to be the basic treatment across the board.
There is one more addition that I would like to add, is that the system comes with COBIT library of risks and controls for COBIT 5 library. So it covers cyber risks and the various sources of risks and the controls that need to be there as well. The second question is, what in your opinion are the changes seen in the priority of external risks in the organization, to the organization after COVID-19 breakout globally? It's a very important question because the world after COVID-19 is not the same as the world before COVID-19. Accordingly, any organization needs to conduct a complete review of its risk registers because impacts have changed. Probability of risks happening have changed. What used to be a low probability of occurrence went up dramatically. Cybersecurity risk, for example, became a much higher probability risk than before. And you can see many some statistics are coming up saying that it has multiplied by more than 2 to 3 times after COVID-19. So people are more relying on information technology, and accordingly, cybersecurity risks, information technology risks are going up in their importance to the organization. So a complete review. Now we are talking about supply chain problems, increases in costs of transportation and delivery. So all of these need to be reconsidered, and those are, very important to take across your database of risks and review the importance of the various risks facing the organization. Any other questions? Okay, if there are no questions, I would like to thank you very much, all of you, for attending today. And I would like to ask the Institute to thank the Institute of Internal Audit, TİDE, for allowing us to speak in front of you today and giving us the opportunity to be here.